Hello, folks. We're going to talk about Paytm and what happened to the Paytm business thing. Again, we're not going to go to. I don't want to make this an opinion video and not speak about Paytm specifically, but the broader theme: what's happening in the payments or the wallet business industry or fintech itself. Fine. So, a math teacher. So we start with Venn diagram. Fine. So, what is fintech? Fine. So there is finance here. There's technology here. And so this broadly, and a nice old-fashioned A intersection B definition of fintech. And so what fintech can do is marvelous. And what has traditionally happened for the financial sector is very easy to bank to people like you and me, guy who's shooting this video, and you guys who are listening to this video. And so very easy because our data is clear. We have our KYC norms will be easy. You'll probably have a PAN card or a legacy of having a banking system and somebody to sign as a signatory, all of that. And it's easy banking. Right? The people who really need short-term debt, short-term loans are very likely not you and me. And the short-term debt market in India is a large, unorganized and absolutely crucial. I don't know how many of you know this. Your vegetable vendors and fruit sellers borrow thousands of rupees beginning of the week and pay 10% more than that end of the week. This happens in several cities, several states in our country. That's a norm. You borrow 3,000 rupees on Monday, you run for the whole week, you give back 3,500 rupees if you're very lucky, 4,000 rupees if the rates are onerous on Friday or Saturday or Sunday, whatever. So it's a 1 week cycle, 10%, 15% interest rate is the accepted norm. If you do the compounded implied rate, it's huge. And the financial sector would love to give loans to that part, but a tricky market to lend to because one, the default rates will be high. That's understandable. Going through hoops and making sure that they're compliant and getting the data on board and cost of disbursing these loans will be too high. You cannot have a beautiful HSBC office in BKC and say I'll maintain a loan book of 1,000 rupees each to 1 million people. Doesn't work like that. Right? So therefore, the wallet part of the business is a bazooka. And what the fintech guys are saying, what the technology guys are saying, where fintech has come and played a role, is saying, look, we have a mechanism to reach these millions. The people are there, they're available, they want to borrow from you. We have a network that is very powerful. And without this, you cannot reach to the large number of tens of hundreds of millions of Indians who desperately need to be banking. Right? So it's a fabulous solution, and fabulous. And so what tech can do to fin is brilliant because finance has the balance sheet. Tech has the network and reach. These guys have the ability to give the loans. Those guys have the ability to reach the players. And on top of that, they are saying, look, we have the ability to even identify who are the better people to lend to. We have the data richness and analytical richness because we have an app. I've been trading with them. I know how much his business is. He can't lie to you and say, Hardin, my 1 lakh is based on, and I know that he's trading only for 14,000. So that is also there. He says, I not only have a network. So what do these guys bring? The tech guys have network. They obviously have tech, reach, analytics. By analytics, I mean which one is better, which one is not better. Easy disbursal of loan. A bank can say, look, I'm giving you 5,000 crores, disburse it to the best guys possible. Let's have a mechanism to share the spoils. What banks have? Balance sheet. What I mean by balance sheet, the ability to do this. What they also have is a banking license, right? Which is a contentious thing, right? Which is the bone of contention in some form, right? So now this seems like a win-win, beautiful combination. These guys bring something to the table. These guys bring something. Both need the other. Magic happens, and hundreds of millions of Indians who need the banking, who don't have access to banking, now get that. It just revolutionize life. I think that's what many of our tech bros are saying. And so where is the conflict, the point of conflict coming here? And so this industry is regulated. This industry, by definition, is a little bit libertarian, philosophically, culturally, and free birds go to code. Right? So they get chained to their desk, but a whole different thing. But I'm saying they're creating and building and they're doing new things. And so this is strong regulatory framework is present, right? Why is there a need for a regulatory framework? It's very important, very often, very overlooked point. And so there's a technology industry, there is telecom industry, there is banking industry, there is insurance industry, there is FMCG, there are industrial goods, all of these industries, all of them have a regulatory authority. There is TRAI, there is some ombudsman or something with manufacturing over, all of that. But finance has the maximum regulation because the interlinkages are very powerful and finance runs on trust. Very important. The last man standing there and backstopping the entire system is RBI. If you're in a small bank in one part of a state and you give out a bad loan and therefore you become insolvent, one way or the other RBI bails you out. Either they get you to be merged with another place, or they step in, or they figure out a mechanism to forcefully recapitalize it. But in our history, there's been threats of deposit runs and bank runs, not happened even once. Because the depositors trust in putting their money into the bank. If that is gone, then the banking system collapses. And there is a depositors insurance that is there, that is official, tangible, clearly demarcated, stated backstop that the RBI provides. But beyond that, there is a bazooka that is sitting inside. Every single person in India practically knows that whether they deposit in ICICI or IDBI or HDFC, the bank share price goes up or down, their deposit is kind of safe. They know that, and that is done because of the RBI. So the RBI is unwittingly, clearly providing that backstop automatically. Then they say, look, I need to make sure that your fiscal health is fine, because if you mess up, it becomes my problem. This is not the case with any other sector. So banking system has extraordinary regulation for a clear and extraordinary reason. We all need to accept that, and this is how it operates worldwide. Because the trust underpins it and the central bank underpins the trust. The interlinkages are all of them either stated officially or unofficially. All the biggest risks are undertaken by the central bank in each country. Biggest risk in the banking sector. That means if I'm taking the risk, then I have a right to oversee. Very simple. And if you borrow from a bank and build a house, they'll come and see whether your house is fine. This is like that. And every bank comes under the purview of the regulator. And very important to understand why that is needed and how that is done very clearly. Right? Now coming to this, there is a conflict in the entire fintech space between kind of what the RBI wants to do and what the fintech players are saying. I won't say there is a conflict. Conflict is a strong word. Conflict was probably there a while ago. They're all working together. I'm very optimistic. I have a lot of my friends working in the fintech sector. But this is not resolved yet. The banks know where the boundaries are. The banks can be called up by RBI and say, look, show me your numbers, we need to have a look. And that the relationship that the tech providers have with the finance companies is lots of times they don't take balance sheet risk. They share their data, they give their reach, they give their network. The banks disburse the loans and then they are fine. But if the data is not fine, the bank goes bust, RBI has to hold up. So RBI is saying, if your bank is heavily related on this tech, heavily dependent on this tech, then I want to oversee the fintech guys also. And the fintech guys have been asking for licenses and deeper partnership and being able to take deposits and all that, to collect money and hold. Because the wallets, they can do magical things if they're allowed to play in the money market. And then they want it. If they want it, the RBI is saying that means you're taking a deposit. That means the guy who's leaving 10,000 rupees in his wallet is very confident that the 10,000 rupees will stay. That means I'm backstopping it. That means you listen to me. And that's where the boundary drawing part is coming in. Right? So the fintech companies have accepted a ton of regulation from the RBI. They have, and they're working with them. Quite lots of times, RBI, whatever audit they do here for the large companies. And right now, the last 18 months, 24 months, they've been weeding out junk players. Guys who are not compliant with RBI, their apps are being removed. RBI is like, let me weed it out, and the fintech guys are happy with this. Finally, we have 25 guys who are compliant, very clear, coming under the regulatory thing. They know what it is, they know what the gray area is, they understand RBI's pressure to regulate it. It will be brilliant. We need to go there, no doubt about it. On our way to reaching there will be some tussles and redrawing of boundaries. What has happened in this specific instance is that some of the Paytm had a banking license. Banking license comes in several hierarchies. There's the first standard license, there's the fourth standard license, there's the 10th standard license, there's the 12th standard board exam license. And so Paytm did not have the license to operate like State Bank of India. But they had some license. If you have any license, you have to follow a bunch of KYC norms and filing and regulatory and all that, and give yourself open to audit. Their technological systems are probably powerful enough, but their audit compliance systems were not. And RBI told them, rapped them on their knuckles a couple of times, and then said, hey, this can't happen. If this is how you're going to operate it, you can't run that. One is a fact that didn't happen, and RBI is having a discussion. Two, broader, I think it is RBI's way of saying, hey, you can't play by these rules, I'm not letting you play. There's some element of that is there. That's why some of the bunch of startup guys had gone and spoken, I think, not because this was reported as reported, had gone and spoken to the finance ministry as well. That's another thing for all of us to remember. The finance ministry and RBI are two independent things. The government does not have a direct role in mandating what the RBI should do or how they should regulate. Then it can't work. Then the conflict of interest creeps in. It's government job to appoint the head of the RBI. That's it. After that, how they operate internally is not there. But these guys had found other sweet methods of going and reaching out to the government. The government kind of said, look, buzz off, it's your problem with RBI, I am not getting in here. Very subtly. And so, which also means that the government doesn't want to get its hand dirty, because if one of the things goes bust, then RBI turns out to be right, and government interference has created a problem, it becomes a political problem for them. They don't want to get in there. Right? So there's no government role here. Fine. So, and again, this tussle between the regulatory framework and the power that technology can give is there worldwide. It's happening right now, because fintech is a very young industry. I feel, I hope very sincerely that they create a mechanism where the technology companies kind of tamp down their libertarian instincts and understand the regulatory framework. And RBI says, I'll regulate my banks who have balance sheet risk extensively, and my tech guys who don't carry that much balance sheet risk to some extent. And then they draw those boundaries and settle into some form. Because only after they do this, we can have the second discussion, which is super important, which I'm very worried about, and which is not spoken of at all, because we have bigger problems to face right now, is privacy. A lot of apps in our country are willy-nilly trampling on privacy rights because they're not enshrined, they're not clearly stated. And if one app that is sitting on your phone figures out a mechanism to snoop and find out what other apps you're consuming, I don't know whether there's a privacy protection framework to go and crib against. That needs to be there, because several of these apps analytics are based on your phone consumption. Your digital life is a crucial input for some of our tech bros to the digital footprint is an input in drawing a credit score equivalent thing. And so that's a whole new territory, which we're not talking about right now, which we need to. I hope they settle this so that somewhere we say, look, this also needs to be protected. I know privacy is an antiquated concept and all of our other cards are available online, but still, we need to put that framework, because it's not a battle for the last 10 years, it is a battle for the next 20. And at somewhere, just like how I'm saying the regulatory framework needs to be drawn very clearly, the privacy protection framework's serious discussion needs to happen now. So this also gets done maybe before I get too old. Chalo, good to have this chat. Best wishes.